Hello traders, welcome back to another video. In this video I want to show you how you can enter the market when the market is just trending aggressively. I will show you these three patterns so that you can try to find them when the market is trending aggressively. So the first pattern over here will be that the market will come down aggressively like this, and then it will create a low here, and then a high, a low, and then a new high. And sometimes you can still find an entry around here, and then you'll be able to enter at this top over here and then catch this next downtrend. This pattern here is the same as this one, but the pauses can be this long and this one can be even this short. So by doing this one here, this pattern here, you will understand that okay, the market broke this, traded above this high here, and then dropped lower aggressive, and then you will just wait for the market to correct. This move must be very slow. This will be your correction, and this moves here, you know very well that when the market is trending, it will be very aggressive like this. There will be no pauses in between, but if you move on to the lower time frame, you'll see those pauses clearly. So from here guys, you'll just enter from here, and then you can also incorporate your fair value gaps around here, your imbalances here, so that you can make a proper value trade setup. And then on this one will be a small pause without this high being broken here. This is just a simple clear supply zone here, and then you just enter. You can enter in two ways, with a sell limit order or wait for the market to give you a confirmation candle. And then let's talk about this one here guys. This one can be a little bit challenging because in here the market will be very aggressive, and then in here this move can also be aggressive, and then this one will be very slow. This one can be aggressive and this one becomes very slow, and then this one can also be aggressive to the upside. So all in all, this is your let me explain it like this. This will be your impulse here, and then the whole thing here will be a correction for this impulse here. So that means the correction took longer, and then you'll be anticipating that the market will shoot lower. But this one can be a little bit hard because you will think that the market is trying to reverse from this. So from here guys, if you understand these three patterns here, let's try to find them. I'm not going to do a replay today because I just want you to see what's going to happen when the market is trending. So let's move on and see what the market does when the market is trending. Okay, I'm in the 1 hour time frame. I'll also do another time frames. Let's say we are trying to find an entry when the market is doing something like this. We can see clearly that the market is still going down. This one is a small pause here. We can clearly see we have a supply zone here. You can enter when the market closes with this bearish candlestick and catch this this next move to the downside. Maybe something like this. This is 1:5, I think. Yeah, 1:4. Not that bad. It will all depend on your entry on this side. So let's try to find more. And sometimes you'll be stopped out. Don't forget that this is trading guys. Don't even say that you won't be stopped out in your life. Another one is this one. We have a small pause. Let me change this color guys. Yeah, we have this move over here. We have something like this, and then you enter here and catch this move. But if you're not on break even yet, you'll be stopped out. And as traders, we don't see the same thing as other traders. Someone could say, okay, I'm looking to enter short with this zone here. Okay, you will enter here, stop loss being above the zone. Maybe you could also say that you are looking for the market to break this previous high here, and then come to this zone and then drop lower. Maybe if you were targeting this low here, you will be lucky, but no, you won't be lucky if you are targeting this low here. And then let's find more. There's a lot when the market is trending. This one, if you are looking to enter the market around here, you will miss this one here. It's not a problem to miss an entry. Another one here, but I won't be taking this one here because there's a fair value gap around here. So I will be looking to enter the market around this area. So from here, you can see that the market is going down. It's going down, going down, going down. It's going down. And then we have a little bit of pause here. Here is your entry. Let me show you. We have a pause here, and then you'll be looking to enter the market here. Put your stop loss above, and then you enter when the market is moving higher. And if I zoom in clearly, guys, you can literally see that we have a... Maybe let's say your market will be, maybe let's say something like this. You want to enter the market. You can see that we have an imbalance here. Let me zoom in. We have an imbalance here. So that means you will wait for the market to come and trade above this imbalance before taking any sell positions. Maybe you can enter with this candlestick, but you'll be in a loss for a couple of minutes, and then boom, the market dropped lower. So even if you missed this one here, you can still enter the other one here. You can still enter the other one around here. So that means you have an imbalance here, have an imbalance over here, guys, and then you'll be looking for the market to come and close this and get into this imbalance, and then you trade low. And we can also see that from here the market was very aggressive. On this side the market is low, so you'll wait and wait and wait and wait, and then boom, your entry is triggered here. So that's how simple it is. And then another one there here, you can see that we have that one here, but I don't think, yeah, even this one didn't play out as planned, missed by a few pips. They'll try to enter this one. Like as I said before, you will be stopped out here. If your stop loss is above this high here, you'll be stopped out. But in this kind of scenario where you have a candlestick like this, to be on the safer side, you can still put it here, but only with calculated risk. But if you are not willing to take this trade, just move on to other pairs where they don't have this kind of behavior in the market. Like as I said in the beginning of the video, guys, the bigger structure, the one that I was talking about, it will move like this. It will be very, very long like this. If we read into this price section here, guys, you will see that there's a lot of impulse and then correction, impulse and then correction, until we see a move to the downside. So let's try to read this price section very quickly. You can see that the price section here is very strong to the downside. Pauses here, it becomes very strong to the downside. And then suddenly out of the blue, you see that we have an impulse here, and then the market is correcting. Let me clear and see this move is very aggressive to the up, and then we have this. This alone will tell you a lot of information what's going to happen next. Okay, let me try to explain it clearly. We have a correction like this, okay, and we can also see that the market traded above this previous bearish candlestick here, this previous bearish candlestick. So, and aggressively, you can see that the momentum from this candlestick and this one is very huge. It's showing a sign of reversal, and then the market just stopped and then that to trade lower. So that means if we move on to the lower time frame, you will see an aggressive move here. Let me try, because we are on the 1 hour, I'll try to move on maybe at least to the 15 minutes. That will be a clear view for you guys. Let's check it out before we can come back to this one. This is the same thing that I was talking about in the 1 hour time frame. From here, guys, we can see that this move here is very aggressive. This is just a simple impulse and correction. You see a move, aggressive move to the upside, and then you have a correction which is going to complete it 1, 2, 3, 4, 5. And obviously the market will trade below this low, and then you'll be looking to enter the market below the second low here. So from here you'll be looking to enter the market to go higher. Other than that, that means it's just a quick correction to the upside. So let's go back to the 1 hour time frame. We are back on the 1 hour time frame again. Okay, so from here, guys, it can still enter a long position, but you just know that you will be kind of risking because the market is still bearish to the downside. So from here, you just have to wait for the market to make a high here. We have another high here. If you are looking to enter short, okay, so we have the first high, 1, and then we have the second one, which is this one, and then from this one here, that means you are looking for the market to break above this second high. Okay, if you are looking to go short, you just put your line here, and then because we can see that the market is trying to make a range that is going to take longer, so you will be looking to enter the market above this high here, the second high. So from the second high, you will look on this side that do you have an imbalance above here that the market is trying to fill. Okay, let's look. We have a candlestick here, we have a candlestick low, okay, and then we have this one here. That means we have a lot of space where the market is trying to fill this imbalance. So above this high, we have this small piece of price action. We can clearly see that we have an imbalance here. So that means the market might trade above this high so that we can take a short position. So you can still draw your zone like this. And also we can see that the market traded above this high here. So the whole pattern that I am doing here will look something like this. We have a low, we have a high, have a low, the market trade above and then drop lower, make a high here, make a low, make a high, make a low, make a high, and then drop. This is the whole pattern that you need to understand. Let me put it above so that you can see it clearly. This is the whole pattern, guys. You can just put your line like this, make it red. So you will have this high here, and then your zone around this area. That's how, if you memorize this structure here, you are most likely to enter trades that are going to move aggressively after this move here. Once you see the market going higher like this, suddenly just don't forget that you are trading in a correction. So don't be surprised when you see the market moving aggressively like this. So to enter your position on this one, guys, it's pretty much simple. You draw your zone, you wait for the market to touch touch the zone. And I have previously made a video where I talk about all the zones. So from here, you just put your sell limit order here. Just wait for the market come and trade above this zone, above this second high here, and then take a position lower. You can see that the market tried to push lower, but it didn't, and then the market touched here and then it dropped lower. As you can see, it's dropping lower. Let's see, it dropped lower. So what if you have missed this entry here? Well, you have some opportunities to enter the market here. Let's look. I remove everything. I can see a lot from here. We have even this one, and I don't see anything yet. I don't see anything from this side. Even this one can try to enter on here when the market is dropping lower. But this, from entering here, I believe that if you move on to the lower time frames, you will find some entries here. If you have missed the entry around this area, see, the market is just dropping low, and then we have another one here. But you have to be smart when entering this kind of behavior in the market. So right now, let me put a line around here and then move on to the lower time frame and look for entries. I'll use the 15 minutes, I believe, because we are trying to catch the trend that we have missed. So let's look at the lower time frame. We have missed the entry around here, so we want to enter the market. We have this one here. Let me zoom in a little bit. Can enter here, and then we still have another one in here. If I explain this one, guys, it will be a little bit difficult for those who are new, but let me just try to explain it. We have a low here. We have a low, which is, let's make it blue. This will be something like this. There, this is something like on here. So from here, guys, you just wait for the market to trade below this low, which is this one, this last bearish candlestick, and then the market traded below it and then come higher. So from here, just put your sell limit order like this. Another valid reason to enter this, we can see that the bearish candlestick here traded above the previous bullish candlestick. So this one will give you a valid reason to enter the market to the downside. So you can see that you can still enter the market when the market is still trending. Let's find more. This one could have easily stopped you out if you were trying to enter the market here while looking at this high here. Okay, you'll be looking for the market to make something like this. Yes, it manipulated the high, but that's not a problem. Yes, even this one could have easily stopped you out. I don't wanna lie, I'll be stopped out on this one too. So let's move on. Even this one, look how clean it is to enter the market when the market is still trending. The only thing that I was talking about here, guys, was that this move here, this area here, has to be fast. Compare it with this one here. This one is very slow, guys. You can see this one is very slow. Let me do something like this to demonstrate clearly. I'll start from here to here. Which box is very big? Let me just cancel one candlestick. You can see that the market from here is quick. The market from here is very fast. On this side is very slow. So when the market is moving very slow, moving higher, that means the market is going to go down and aggressive. So when the market is moving lower, like very slow like this, the market will eventually push higher aggressive. So even on this side, when the market is moving very slow to the upside like this, very slow, just expect that the market will move lower very fast. That's how it is. So you just have to read the market in a different perspective, not by just looking at the candlestick and say this is an engulfing candle. What does a candlestick tell you? It has a lot of information that you need to understand. So from here, guys, I just want to say please go and backtest, because I have shown you the structures in the beginning of the video. And also don't forget to subscribe to the channel, and also visit our Telegram group. The link will be in the description below. So I will see you on the next one. And also don't forget to like this video, guys, for the algorithm to push this video to more traders and for new beginners, because this channel is based on new beginners. And also, if you want to request the video, comment below. I'll also make it in the future if it's not on the list of the videos that I'm making right now. So I guess, guys, I'll see you on the next one. Ciao.